is going on, YouTube? Welcome back to another breakdown here with the Everyday Growth Advisors. Another breakdown review of some trades that we are about to, or rather we took in the last week. I wanted to go through the new year, how we have been performing in the first week, and also kind of close out 2022 to kind of summarize everything that we've been through and just get everything wrapped up. So as you guys know, I closed a little over $1 million in profits last year. We keep very detailed log of every single trade that we take with the Discord community on this journal, which we record every single day. Now, month in, month out, I have kept a very strict log. As you can see, the log also reflects the same journal that we kept, and every single trade, every single one that we call out on Discord or we take together during the live trading sessions are posted in this log and posted on the community every single day, as well as the profits and losses of every single trade that we take. Obviously, some weeks are going to have a lot of profits and some weeks are going to have some losses as well. So we keep track of all of them and track them so that we know at the end of the year how the performance of ourselves were. Now, you can see every single trade here has been logged meticulously. Obviously, there are some weeks that are extremely green and some weeks that are red, right? There are always going to be ups and downs in trading. And in fact, I wanted to take a chance in this video to wrap up 2022 with 3 of the biggest lessons and challenges that I see beginner traders making. And honestly, I think that it all boils down to a couple of things. And right before we jump into the breakdown of trades from last week, let's go through these 3 major challenges that majority of traders face when going through their trading journey. And I think the first one, by now you guys should already understand and get it after watching some of these trade breakdown videos. And lesson 1 is nothing is ever guaranteed in the stock market, right? You might think that, oh, inflation is going to cause this and inflation is going to cause that. You might think that there's a gap here and you might want to play a gap in a specific way. You might think that, oh, there's a supply resistance line, and people always tout that kind of a thing. But remember that the powerful mindset and groupthink mentality of the market is always going to supersede any kind of a confirmation that you have, because when the mentality of the market changes, it changes very quickly and there's almost nothing that you can do about it. Okay, so I'll leave you that with lesson number 1. Always remember that whenever you see profits, take it quickly. Engage in doing things consistently with discipline rather than aiming for one-hit wonders, hoping that you're going to hit 500% and make your account from $5,000 into $50,000 overnight, because those kinds of levels of discipline, they're not going to bring you to where you want to be. As my parents have always brought me up, and with a very simple lesson: easy money come, easy money go. So the easier you try to make your money, the faster it's going to elude you, and you're not going to be able to get on that journey as quick as you want. Okay. Now, the second thing that I see most traders doing that I also want to bring out, which is the second lesson, is that you got to use, when you're getting into trading, you have to use money that has the lowest utility to you to do so, instead of money that is extremely important to you. So what I mean by that is you should have your rainy day savings put away. You should have all of the money that you don't really need right now. That should be the only money that you use to trade. If you use money with a high utility that is to you right now to trade, what's going to happen is that you're going to get mentally drained each day because the emotions of the market are going to get to you. This is mainly because the utility of money is linked highly to your greed and your fear and how you're perceiving every single fluctuation in your profit and loss of your everyday journal. Okay, so whenever you make a loss, and that loss is, that money was important to you, you're likely to trade back in revenge more often than if you were trading with money that you didn't really care for anyway. Okay, so that's a really important thing that allows you to remove emotions from trading, and you should really put that at the back of your head. Don't trade with money that you absolutely need right now. Like, if you need to pay rent first and then use the money for trading. Like, don't say I'm going to flip my rent real quick to try and make a couple extra dollars to pay rent, because it's not going to work. And when you lose that money, it's going to be 10 times worse. Okay, I see a lot of people doing that sometimes, and it's kind of sad, but it is what it is. Okay, you got to really stop doing that. And Thirdly, I think the most important thing by far among all of this is you can be a really good stock picker, you can be a really good analyst, you can have the best indicators, you can have everything in the world is going to try and give you the right ideas during your trading journey, but nothing is going to set you apart more than being an expert risk manager, okay? Risk management should be at the forefront of your trading journey. You should be always thinking about how much you can lose rather than how much you can make. How much am I going to cap my risk off versus what are the possible returns of this trade? Always think from that perspective and put it all on the line so that you understand what is it that you're risking before you start to fantasize about your gains. Okay, your trading gains, the gains that you make while you're trading are not going to be always in green. You're going to see fluctuations throughout your whole career. And the days that you perform poorly are going to really define you and your character. And so if you have it in your mind that you always have to perform in a certain way, it's not going to work out well in the long run, okay? So that's all I have for you guys. 3 lessons from 2022 for beginner traders. I think that these are very important lessons that you should keep at the back of your head. Now let's dive into last week's trades and the breakdown, all right? So last week, as you can see, I started a new tab here for 2023 now, so everything will be logged here. Went ahead and color coded it so I can know which trades will link together. So let's start off with the first trade of the week, which was gold. I had a short gold trade that went against me, okay? My plan for this trade was based on a macro structure of the US dollar strengthening, which would cause the gold to sell off. But that didn't happen because things changed. There was also in between a Bank of Japan intervention event that caused my thesis of this trade to change. I decided to hold on to it a little longer than I should have. Right above 171, I broke. When it broke above 171, I cut this trade, okay, because I didn't want to hold it on for too long. And most importantly, I got out with, just trying to manage my risk. Even though this was a pretty bad risk management on my part, so you can see 78% loss on this trade. I think that I can do better next time. The only good thing, rather, was I risked very little on this trade, which is about 2.5% of my portfolio. So I knew that I would add more as I went along, and so therefore I kept my risk defined before I got the confirmation. So this is one of the saving graces of this trade that didn't make me lose as much as I should have in the end, okay? So yeah, this is one of the trades that I took a couple weeks back, and then now I had to close it out. So we started off the week red. Some of you would already, be thinking to yourself, oh my goodness, like I started the week off red, now I need to claw back my wins and this and that, right? I know how that feels like, but most importantly, at that juncture, you have to tell yourself, okay, well, that happened. I just need to calm down. I need to walk away. I need to do something else, and then come back with a fresh set of eyes and trade again, right? So a little bit of a break, and then I started getting back into momentum of things. The first trade of the day were these two AMDs. As you can see, they're both part of the same color, so they were closed out in different times. And so let's go analyze that trade real quick. Okay, so AMD, really simple trade. There was a gap up, which signified that overnight there was a consensus change and semiconductors were looking green for that day. We knew that AMD had broken over this significant resistance level, which was around $65. We were looking for it to continue up to close the gap at around $67. But remember, nothing is guaranteed in the stock market, right? Just like this. So going back to lesson 1, nothing is guaranteed. So what happened was the market rallied really quickly. This happened twice last week. And right after that, shortly, we got a little bit of a reversal candle, which implored me to immediately take profit. So that was the first one right here. I took profits right away at around 25%. And then the second trade, I had already set a stop loss above my break even and got out of the trade at around 8%. So this trade pretty much closed out right at the market open, really quick. First 15 minutes, I was already in and out of this trade. Okay, same day trade was Boeing, another breakout trade, which was a scalp. So we'll jump into that real quick. This was also a very simple breakout play, broke above the key level 193 after a gap up and also previous resistance. So we were looking for play up into this resistance level here around 196. And so we took that trade off very, very quickly on Boeing to take profits on that. So entered and exited with about 34-26%. You can see one of them is lower because the second exit was lower back here. But because our entry was almost close to the open, we managed to bag a decent amount of profits here and get away with that. Okay. Then was XLF, and you guys should know about XLF by now. It is a macro trade. We have been looking at financials being bullish for a good half of about 3 weeks now. I've been talking about it on the pre-market live streams. I've been talking about it on all of the channels and Discord as well. And so, you know, the XLF trade was mainly a swing trade to play the bullishness in financials. And this is pretty much the area where we called out the bullish trade to play $35 calls. And we got first move up that really juiced premiums really well. So I managed to grab majority of my position out of there for a $900 profit. Simple and easy trade. Yeah, on the dip, we added more to that trade. So roughly about here where the green arrow is, we added a bit more to that trade to play to more upside. As you guys know, this Friday, banks are going to start to post earnings. So right before banks start posting earnings, by Thursday, even Wednesday, I'll be out of the trade and I'll take profits and run. Okay. Next up is going to be Netflix. So this was also a rejection play. You can see that I have all the setups written here, right? So Netflix, let's have a look at that one. Rejection play, really simple. We had pretty much played some 293 puts on this one. So I believe that this was right here. Right here. Simple trade. We had Netflix was kind of moving upward in this rising, ascending triangular pattern. Okay, it's usually called like a pennant, but it's a slanted pennant, so you call it a rising wedge or a rising triangle. And pretty much what happened here was we saw a rejection of a breakdown of the 293 level, which was a key level, and then also a continuation of the fall. And Nasdaq was also weak along with this. So simple entry of the puts at the break right here at 294. We went for the 293 contracts, which is right in between. Wanted to go about $1 out the money. That's typically what we do for a day trade. And exited one of the contracts here, and then the other half right here. So you would see, yeah, exactly 2 exits right here. You can see one of them was for 15%, the other for 23%. That's the first one. That's the second one. So I've been keeping really good notes on exactly where and we've been entering and exiting. So I can better even analyze myself, right? So simple, straightforward rejection trade there was the opening sell-off rejection along with the indices, and that was a straightforward trade. Next up was Apple puts, and let's have a look at that one. This was also a similar, this is the same setup as Netflix, except for with this one, we had more movement. So right on the break of the 128 level here, you can see we entered some puts, and it continued to sell off into the day. We knew the target would be around 125, and we went for some 127 puts. So once again, 128 is where we were, $1 out the money. We took some 127s. Those closed out in 2 tranches. The first tranche at 39%, second tranche at 69%. So simple and easy. That was a very simple trade. Next up, Baba paid out really well this week and has continued to pay out. And I'm just going to go through these both at the same time because they're going to be a total of 5 trades for this week since I'm going to be looking at the same chart. With Baba, we've had continued momentum, and you can see the percentage profits on these have been pretty crazy. We've seen continued momentum, and China being, in the macro situation, you can see it's a roll and a momentum for this one, but macro for this. So it was mainly a macro trade that we've been looking at. Now, the first entry was upon pretty much this situation here where we had a gap up and continued. Like we've been looking at Hong Kong trade Baba, which is 9988 on the Hong Kong exchange. On the pullback, the day before we took a bullish entry here, and it pulled back pretty much the entire day, but then next day gapped up about $7 or so, giving us 2 exits right here. So that you'll see that's the first 2 exits right here from the $100 calls we took. That paid 97% and 105%. Now right here at the bottom, when it pulled back, I entered another tranche, and these also paid pretty nicely. you'll see those are the 105. So basically what I did was I took some of the profits from here and I dumped them into a roll. So I played the strikes above it, and it immediately ran on the same day all the way up, and I exited somewhere up here around 102, 103. These paid out pretty much, one of them paid out 22%. I took profits way earlier than I should have, and the second paid out 128% on the same contracts. Okay. Now the third one I let run longer and then exited that at 172%. So you'll see like the third one is a little higher here. Okay. So that was BABA. Then we have another Boeing trade. This was $200 calls a couple of days later. And so this was up here pretty much. Oh, this was right here actually. Breakout of the previous level that we spoke about, right? You can see we broke out the previous level that we spoke about, and that's when I took the trade above 197, and I went for some $200 calls. Now, the premiums moved so quickly that I only managed to catch a little bit of this move, but I wanted to hold on for a little longer, but the problem was that the market was really weak. I remember this right now. The market was super weak, and it was selling off, and the Dow Jones was also looking like it was going to reverse, and so therefore I took profits early on Boeing, because why? Nothing is guaranteed in the stock market. When you see 20-30%, you take it off the table. You can leave some contracts on the table and let them ride, but don't be greedy, right? So I did consistency-wise, I just took them off the table and I took my profits right there. Then came Nike, which was another trade that we took pretty much on the breakout. This was a breakout of the inverse head and shoulder pattern. This level right here, the 122 level, 120. Actually, it was this level right here, 122.40. Upon the break of it, we took some calls for a day trade. Really simple. We were expecting it to move further up, but not so much so like up into 128, but like for the day we were expecting strong momentum to at least try and break, and we wanted to scalp it. So we took kind of a breakout pattern, which was pretty much a scalp trade, 18%, 23%. Once again, scaled out majority of them at about 18%, balance at 23%. So you can see how I do this. I'm constantly scaling in and out, in and out, in and out. Okay. Next up was Boeing. This was a loss, so go back to Boeing. Now, the fact that it ran up so hard, I wanted to go ahead and press the rally. Now, I eventually would have been right on this, but I exited too quickly. So with Boeing, here's what happened. After I exited the previous tranche, I decided to re-enter somewhere around here on the pullback, okay? But what happened was the indices were pretty rough and they were kind of choppy. And then we had a deep pullback towards the end of the day, and I got stopped out. I put a 20% stop loss or a 25% stop loss on my trade. Yeah, 25% stop loss, and that's what exactly happened, a 25% loss on that one. I got stopped out of my trade. I can't do much about it, right? And then right after that, I thought, you know what? Baba's been running for quite a while. Maybe I should take a short trade here. But then also there was weakness in Chinese stocks for that day. So I entered some Baba puts, and those Baba puts were entered somewhere around here. Pretty much after I exited the previous tranche, and right after I took those, Baba actually did drop the next day. It dropped. It sold off in the Chinese market, but then right at the market open, it ran really hard. And so I was hoping that it would close the gap and come back down, but it didn't, and it kept running the whole day. And that also hit my stop loss at 27%. So sometimes you're not going to be right. That is okay, as long as you're managing your risk, right? Keep your losses small and your winners big, right? Or at least consistent, right? Some 69, some 100%. You got to have them at least somewhat consistent, okay? And lastly was this Netflix trade. And so let's go through that one. Netflix was this trade right here, pretty much. So 308 puts is what we played, and simple little trade breakdown from the range that it was trying to create here. It had a little bit of weakness. We saw the reversal right here, so you can see Netflix with the reversal of the 313 level, pretty much. And then after the indices started weak for the day, we took entry right at the break right here to enter some weakness here and played it down into the trend line. So entry, exit, very simple trade. This was a scalp, literally out within 10-15 minutes, okay, for 28%, about $2,000. So really, really simple trades that we took last week. This totaled to about $17,000 and $755. So that was a decent trading week. Now, a couple of things that I should have done better was manage my risk better with this gold trade. I feel like I didn't do that as well. I should have done better. And you know what? It's okay. You're always going to have something to feedback on every single week. Okay, but it's really important that you acknowledge it. Don't have ego, and keep your head high. Don't let market play tricks on your head. All right, with psychology. But that's all I have for you guys for this week. I'll continue to do trade breakdowns as and when I see fit. I hope that you guys find these useful. If you do, let us know what kind of other content that you want us to make for you. If you find these useful, perhaps listening to why or how we entered and exited, if these are useful to you, drop a comment below. Let us know. I love hearing from you guys, and we'll continue to see you guys on the live trading sessions. Remember to keep reading those newsletters, and if you are interested in joining our Discord, the link is going to be in the description below. So take care, and I'll see you guys on the next video. Peace.